Yo, where we at? What's up, guys? Welcome to Stock Watch Sunday. Welcome to Own the Chaos. My name is Brad. The stock market is crazy. It's chaotic, and I made it my mission to help you own it, make some money, whatever it is that you are looking to do. I want to help you do it. So, real quick, I just realized that I am super bright. So while I'm talking and letting people roll in, I'm going to adjust this real quick. Holy cow, am I bright. I know I'm a white dude, but man, I am not this white. I was messing around. Just a full disclosure, guys, I have a brand new computer here. So I've just kind of been adjusting things. So super sorry for that. Going to go let's see here. Boom. We are going to adjust this real quick. Hey, that's much better. That'll do for now. So let's go ahead and welcome some folks in here. What's going on? Stephen Lang, Mark72. What's up, guys? Good to see you. Yeah, I was a little pasty, Mark. Sorry about that, guys. Earnings week. Yes, we have an incredible earnings week this week. Unbelievable. So we got some stocks that we're going to watch for, and I'll get to that in just a moment. But before that, we'll go ahead and do where I was right, where I was wrong, and then also talk about the stock market as a whole. Where are we headed this week? There's so much going on. Good news, bad news. What is there? What can we expect, or what should we be prepared for? We'll get into that as well. So, without further ado, let's go ahead and get it. Where I was right, where I was wrong.
When Brad was right.
All right, so last week in Stock Watch Sunday, I said Logitech was going to crush earnings, and crush earnings they did. Estimated earnings were actually at 28 cents per share. They came in at 64 cents per share. Absolutely crushed it. They ran up from $68 all the way up to nearly 74, and then obviously pulled back along with everything else. Ended up pulling back to around that $68 support level that we called out back last Sunday, and I think that probably ends up holding. But in my opinion, I think Logitech is a really good long-term hold. If you want to swing trade this for a little bit, I think that's probably also a good idea. 68 seems to be a really solid support, so Logitech absolutely annihilated. Next is Tesla, which I went live with you guys on Wednesday. And let me know in the comments or give me a thumbs up, guys. I had a record live stream turnout. Almost 900 people tuned in during that Tesla earnings call, or where we were just watching and waiting to see what the earnings were going to look like. You guys really seem to love that. So let me know in the comments if you want to see that this week with Amazon, or maybe PayPal, or some of these other ones, Apple, what have you. Give me some ideas, because I really want to kind of capitalize on that. I think that you guys really enjoyed that. So give me some stocks that you want to see me go live for, and we can kind of chat about it and talk about it like we did with Tesla the last week. But that being said, I said that Tesla would crush earnings last Stock Watch Sunday. The estimated earnings per share was at a loss for $2.35, which I said was an absolute joke. And I anticipated them being profitable up above $1 per share. And then obviously this is non-GAAP, but yes, they were $2.18 is what they actually came in at. They did pull back significantly. Now, if you recall, last week I did say that I felt as if Tesla was a little overvalued. I know it's not a popular opinion, but I'm trying to be real with y'all. And fortunately, this did come pulling back. And I think that that's going to be a good opportunity to probably scale some more in on Tesla if that is what you would choose or want to do. I mean, it pulled back with the rest of the market. The whole entire market just pulled back last week, and I think it's going to lend itself to some really good buying opportunities. We'll get to that in a sec. But anyway, they crushed earnings. They are on their way to the path of being into the S&P 500. So this is going to be a really big moment for Tesla. They announced that they're going to be building the Cybertruck factory in Austin, Texas, which is going to be absolutely incredible. I was just looking at some of the plans for this Austin facility. It's going to be insane. Absolutely insane. I almost kind of feel like I want to go back to work just so that I can go work for Tesla, just to say that I was at the Gigafactory and all that good stuff. But unbelievable stuff that they have going on with Tesla. So definitely was right about that. Microsoft beat them. They beat earnings. Sorry, I was right about Microsoft. They beat earnings, not by a ton, but they still beat them pretty handily. The stock pulled back with the rest of the market, just like everything else, as I said. And I also said that under $200 was going to be a gift for Microsoft. They beat earnings. They had all kinds of other good stuff. Their Azure numbers were not good, which is what people were expecting them. They were expecting that. But here's the thing. Cloud computing for June for Microsoft, that was 40% of their revenue. So guys, listen to me here. 40% of their revenue, I think it was over 40%, came from the cloud computing services that they provide. Think about that for a second. And think about the rest of the cloud computing sector. When we talk about Fastly, when we talk about CrowdStrike and Slack, which we know that there's been some controversy with Slack and Microsoft, so there's going to be some issues there. But these cloud community, it's just absolutely insane the kind of numbers that they're pulling out when it comes to revenue related to that sector or that industry as far as cloud computing is concerned. I think Microsoft is a no-brainer dip buy here, in my opinion. Buy and hold it forever. You can retire on this one, and really you could, well, maybe not Logitech, but Tesla I think is definitely another one you probably could end up retiring on. And your speculative side, if you're nice and young and want to take a little bit of a risk, I like Tesla a lot. And so finally, here's Snap. And Snap, I was a little bit torn on with Snapchat because I said they would beat earnings, and I was right. But they missed some of the revenue numbers and some of their subscription numbers. And so then the stock pulled back to almost $20 a share. In my opinion, that is unwarranted. If you guys actually happen to listen to the conference call, Snap's going places. And I think, like I said, buying the dip on a lot of these makes a lot of sense. Snap is another one. All of these companies beat earnings, and they all pulled back. So in my opinion, when you're looking at something like this, where they absolutely crushed earnings, these companies did not just survive through one of the worst economic depressions we've ever seen, but they thrived in it. So in my opinion, I think that if you're looking at companies that thrived like this in the economic situation that we've been in, I mean, we're talking about unprecedented here. There's some arguments by certain metrics that argue that we are worse off than we were in the Great Depression by certain metrics, unemployment, all that good stuff. And these companies thrived. They did so well through all this. And I think that, in my opinion, just speaks volumes to the quality of these companies and that they're essentially unkillable at this point. What's going to kill Microsoft right now? What's going to kill Amazon? We're going to talk about Amazon in a little bit. But that is kind of my logic here when it comes to investing in companies like this that are just thriving through all of this. And they're hiring people. And so I think that those are going to be really good ones to buy the dip on. All four of those that I got right last week are going to be really good opportunities for you, in my opinion. Lastly, when Brad was wrong. So AstraZeneca, we talked about. So this is one that, I still think the verdict's out on, but I'll go ahead and say that I was wrong on this one because it popped up and then actually came crashing back down. But nevertheless, I do think that AstraZeneca still probably ends up beating Moderna in the race to a vaccine. It is neck and neck with a lot of them, guys. We saw positive news from Pfizer and BioNTech as well. And then Moderna, still very much in the race. AstraZeneca still is right there as well. It's all going to depend on who wins. It's really all going to depend on who wins. And who wins that race? Your guess is as good as mine. But I still would put my money on AstraZeneca to probably win. But it'll probably be close between Pfizer and AstraZeneca, in my opinion. Johnson & Johnson still very much in the mix as well. We've heard a lot of things about Johnson & Johnson over the weekend, too. So there you have it, where I was right, where I was wrong. I just do that segment every week just to kind of hold myself accountable, right? Let you guys know that it's not something where everybody gets it right 100% of the time. You have a lot of YouTubers, you have a lot of influencers out there. They make it seem as if this stuff is easy and it comes a diamond, it's just something that you pick up and it's like breathing all the time. And while in many cases it can be, you never get it right 100% of the time. So if you guys liked where I was right, where I was wrong, give me a thumbs up. Certainly would appreciate it. Helps with that good old algo, apparently, so I hear. So thanks, guys, for that. Moving on, the stock market in general. So we have a couple of things that we're looking for. We got 321 people in here. This is awesome. You guys are incredible. I love you guys. But the stock market in general, moving forward into this week, there's a lot of strikes against the market to go down, right, to the bear side. And we'll go over this. So we have reasons for the market to continue to pull back. U.S.-China tensions, and right now you're looking at futures, and I'm looking at them, and it's kind of mixed at this point. They're a little bit down, not too much. But you have U.S.-China tensions. We saw that the China consulate down in Austin got shut down, and then China went and shut the U.S. one down. So, there's those issues going on as far as trade wars are concerned. Lots of companies, lots of Chinese companies may end up being pushed out of being publicly traded in the U.S., which is still very much on the table. The White House is calling for investigations on leading tech companies that are associated with China, which is why we saw a lot of those FANG stocks pull back quite a bit. We have stimulus checks that potentially aren't coming yet. There's been pretty much confirmation that the stimulus checks are going to be delayed. There's a lot of arguments about, the Democrats want to have stimulus checks of $600 a week through the end of January. And a lot of Republicans are saying, well, not so fast. Let's go ahead and do 70% of their normal pay and not to exceed that $600 a week. So the incentive here, they want people to go back to work, and they think that if giving them $600 a week is too much, they won't go back to work if they're getting paid that kind of money through January. And I would say that there's probably some arguments to both sides. You have, people who really are hurting out there that can't pay their mortgages, that can't pay their rent, that are relying on that money to do things to actually live on. But then you have this other side of it, right, where you have people that we've heard stories that people using their stimulus checks to invest in the stock market, which really isn't the intention of that money, right? So I think there's arguments that can be made for both sides, but I do hope that they get to a conclusion. I do think that there needs to be some sort of stimulus to keep the economy going, because there still are millions of people without jobs, and a lot of it's because they can't get one, right? So I think that there needs to be some sort of stimulus, but you guys let me know what you think in the comments below as well. Here's some reasons why it could go up. I think that if we see some really amazing earnings, especially from Amazon, Apple, some of the other ones that we're going to be talking about tonight, I think that if we see some really good earnings beats, that it will give us a better snapshot of just how the overall economy is doing. And we're seeing this, right, where there's some earnings plays that aren't really, most smaller companies that aren't really kind of delivering on the earnings. But when it comes to like the FANG stocks, some of the larger S&P, the big major corporations, they are carrying the rest of the market right now. And we've seen that throughout the last quarter and a half up to this point. So if those companies are still doing well and they're blowing earnings out of the water, there's no reason for me to believe that they won't continue to carry the market forward. And so I made the bold prediction here that back in April, I said that the S&P 500 would reach $3,500 by the end of the year. I still stand by that, and I think it will happen. Just to give my 2 cents as far as that's concerned. So we got, and then positive stimulus news. So like if Congress gets their act together, they end up coming to an agreement, then that could definitely get the market going again. And then finally, vaccine news, which we always know that whenever there's some positive vaccine news, we see a run up in the overall markets. So where do I stand with this? What do I think could happen? I think going early into the week that we will see a pretty significant pullback. Monday might be a tough day. But that being said, I think overall I have a lot of faith in some of these bigger companies that are coming in with earnings. And I'm not talking about, some of the leisure earnings or anything like that. I'm talking about, like your Amazons, PayPal, Facebook. We're going to be talking about a couple of these. AMD, we're even talking about a lot of these other smaller tech companies that are absolutely killing it. So let's go ahead and get started with that. And let me go ahead and just check in with you guys. Yeah, you know what? That's a really good point. Civil unrest is probably not helping things either. So there's just a lot of things going on in the country that could be impacting the stock market. My opinion, though, is that we probably do see a little bit of a pullback, maybe going into tomorrow. But by the end of the week, I think things will settle out. I think that, once we get past kind of like the initial, worry when it comes to stimulus and all that, I think the markets will be fine. So in my opinion, I would use this opportunity to potentially add to your positions. I've always been encouraging people to keep liquid, stay liquid, so that you can use that cash to then add on some of those dips. And it's encouraging to see that Warren Buffett's finally spending some money as well. We saw him add quite a large amount to Bank of America this week. So that being said, let's go ahead and get to the top 5. How are we doing? Are we back? We're back. Okay, we're good. Woo! Sorry, guys. All right, let's go ahead and start that all over again. So my bad. I don't know what happened there, so I just stopped and restarted, and it seems like we're good to go. So I have no idea what happened there. Let's go ahead and get started with the top stocks that I'm watching this week. Top 5 stocks here. First one's going to be AMD, so I'll go ahead and just repeat for those who... okay, we're good. Okay. Sorry. We're going to get with AMD. So AMD this week, their estimated earnings per share are at 16 cents. Now, the last 4 quarters, it's always been 16 cents. I think they beat them just like they beat them over the last 3 to 4 quarters. AMD shot up 16.5% on Friday after their rival Intel announced that there was going to be a delay on their launch of their newest chips. They recently announced that they recently debuted their new Ryzen chips as well. AMD did, and it seems that they are firing on all cylinders. I think AMD knocks this out of the park. It gapped up significantly. I've been singing AMD's praises since it dipped down to $49 a share. If you guys are in my morning mentorship where I go live with folks every single day, I've been talking about AMD. By the way, if you want to check that out, links are in the description. You can get free 30 days by entering the code CASINO, so go check that out. Links are in the description. And so if you want to check out AMD, I think it's appropriate to probably hold off on AMD to see if there's going to be some sort of pullback before we see earnings on Tuesday after hours. So looking at this, I'm just looking at the chart here. I think that it's going to be potential pullback right around here, around $63 per share. But I would be surprised if it came back down below 60. Looking at this, I think it just makes a whole lot of sense for there to be some sort of pullback, especially after this gapped up on Friday because of just what was going on with Intel. And I think that AMD definitely has a pullback in it, and that's where I would look for potentially $63 per share. If by some chance it does not pull back, maybe about if we split that in half to around 66, that could be another spot as well if you have not yet hopped in on the AMD wagon. If you have, congrats to you. You guys know that I've been talking about AMD forever. I love this stock. It's belonged over 60 for some time. It's finally getting the love that it deserves. Okay, moving on. Let me just double check with you guys because I want to make sure. I'm a little paranoid now. Are we good still? All right. I think we're still good. All right. Okay, so next, PayPal. PayPal has earnings as well. Let's see here. After hours on Wednesday, estimated earnings per share are 88 cents. I think they beat these earnings by a mile, folks. PayPal has been the way that people have been spending money. We have Venmo that's with PayPal. They've been looking at direct deposits, that sort of thing with PayPal. And their estimated earnings per share at 88 cents, I think, is a bit laughable. And so they've been working on frictionless transactions. I think that they are just going to absolutely crush it. Is it overbought? Hell to the no. It's pulled back here, and I think it's going to be it's lending itself a really good opportunity at this support level at potentially around 165 or 164 area. I think that they do really well, and going into earnings on Wednesday, they probably end up running into those earnings. Here's what I would do, though. I probably wouldn't throw the boat at this just in case. You know, we always talk about earnings, right? How about how risky they can be. And even if they meet certain expectations and they beat earnings, it doesn't mean that it's a straight shot up. In PayPal's situation, though, in PayPal's case, I think that they do actually end up doing well. So it'll be interesting to see how this plays out, but make sure you're managing your risk properly. Don't go throwing the farm or betting the farm on PayPal, but I do think that they end up crushing it. If they can get up over this $183 resistance here, which is where its all-time highs are, I think this thing goes higher. It'll be interesting to see if we can break that. But I love PayPal. I love PayPal. I love Square. We saw Square pull back quite significantly as well. Square's been settling down around $118 a share. I love that for a little support area. We see dips on that, which we saw on Friday. Definitely a good opportunity for that one as well. PayPal is like 1A for me. Square's 1B. I love them both. If you guys haven't checked Square out, definitely would suggest doing that as well. So PayPal, Wednesday after hours, 88 cents per share. I think they beat. All right, moving on. We got Facebook. Facebook has earnings after hours on Wednesday as well. Their estimated earnings per share are $1.39. I think they beat that. I think they come in at probably around $1.40 $1.46. This could be interesting if we see an impact of the boycott from the major advertisers, but I'm willing to bet that this doesn't make a dent in Facebook's earnings, in my opinion. When we look at the 8 million small businesses, guys, 8 million small businesses that benefit from Facebook's ad program, the ROI that Facebook provides for smaller businesses is absolutely incredible. So they are more than willing to continue spending money with them. I don't think that these larger corporations are really going to be making a dent at all. When we look at how Etsy has nearly tripled storefronts and how Wix has gone absolutely insane with new websites being built because people are starting new businesses from an e-commerce level. I mean, that's where Facebook really shines, and I think that Facebook will be minimally impacted from this boycott. And we all know that they're going to come back anyway. There's bigger companies that are boycotting. They're coming back because they know what kind of ROI they can get. They know that, you know, the traditional way that people advertise is not going to fly anymore. And, you know, in my opinion, I think that if by some chance Facebook continues to pull back, I think it's a really good opportunity to buy on a dip. As we've seen this before, we talked about this when the boycott initially happened. And I think that, in my opinion, Facebook still gets to 350 or higher by the end of the year. Yes, I said 350 or higher by the end of the year. As I said at the beginning of this stream, Facebook, if they can pull this off, if they show that they have been able to thrive in this kind of climate, then they should be able to thrive through anything, which in my opinion would only exponentially increase the value of Facebook. We're going to get into Amazon in just a second as well, but I think that if they were able to thrive through this, in my opinion, they could thrive through just about anything. It's not about surviving, guys. It's by like absolutely crushing it, and it's almost as if it was better than usual, right? So I think Facebook absolutely kills it here. Again, Wednesday after hours, estimated earnings per share $1.39. I think they come in at $1.46. So that'll be interesting to see as well. And next we have UPS. So UPS comes in here, $118 a share, $118.35 is where it closed out on Friday. They come in on Thursday. Is it Thursday? Yeah, I think it's Thursday. I didn't write that down. My bad. I think it's Thursday. Pre-market. Yeah, it is Thursday. Thursday pre-market. Estimated earnings per share is $1.08. I think they beat that. Probably like $1.12. Two words here. E-commerce demand. Okay? E-commerce demand. My bonus dad, if you guys get that, get my drift. My bonus dad has been a mail carrier for 25 years. He told me about 2 weeks ago that it's just been crazy with all the parcels he's been delivering. He said the last 2 months have been like Christmas every single day. During the Christmas time, my bonus dad would be like gone. He wouldn't come home until like 8, 9 o'clock at night. And that's how it's been every freaking day. So UPS has stood to benefit from this. And I think that if FedEx was any indication of how well UPS may do, I think that they actually beat earnings. If I'm looking here on the chart, I like this for a potential pullback down to maybe around 112. I'm not sure we get this. What I think ends up happening is that this 118 area is probably where we might see a decent buy zone, and then this actually probably presses higher to its highs around 124.38. If it beats earnings, expect this to break up over those highs, and we will see a really nice move out of UPS. That being said, okay, I just went on a rant about how I love UPS right now. That being said, my concerns are that Amazon has decided to ramp up their parcel delivery and take them up a notch. And so UPS has one of the largest cargo airlines in the world, and its insane demand could be good for them. But I think that if we see something from Amazon, which they have earnings Thursday after hours, UPS pre-market, Thursday after hours is Amazon, could spell trouble for UPS depending on what Amazon reveals to us as far as their delivery service is concerned as well. So be smart. Watch this one closely, but I do think UPS beats, and I think it does make a nice little run into earnings on Thursday pre-market. Again, estimated earnings per share is $1.08. Beats, I think, and it might come in around $1.12 is what I'm expecting it to come in at. So not a huge beat, but I think they beat nonetheless. All right, next. And finally, here we have Amazon. This has pulled back 10% from its highs. And I think that it's a little bit unwarranted. Amazon, like I said, 10% drop from its highs is a gift. It came down just below 3,000, but I think 3,000 is going to be a really nice support for this. They come in with earnings after hours. Their estimated earnings per share is $1.32. I think they kill it. I think they beat it. There's no reason why I wouldn't want to buy Amazon right now. Again, same thing about, how they've been able to thrive through this crazy time. As everybody else is firing people, Amazon just keeps hiring them. They're officially unkillable, like I was saying. And some may argue that it's, shoot. I just lost my spot. Amazon is a buy, like I said, today, tomorrow, and in the future. Just look at the dips. Look for your supports that actually make sense, and just keep adding to this thing. If you want to day trade it, fine. There's always really good opportunities to day trade or maybe even a short-term swing trade. I like this support here at 3,000, and if you wanted to ride this back up to 3,300, where I think it actually gets to, or maybe even 3,250, then you could make a nice little swing trade or even a day trade if this starts to run up towards that on Thursday. But Amazon, in my opinion, is a buy now. In the future, last week, just buy it, in my opinion, guys. Now, again, just a quick reminder, this is just all my opinion, and you shouldn't be taking, just my word and seeing it as gospel. Make sure you're doing your own due diligence and making your own buying decisions and investing in only things that you understand. But that is my top 5 stocks that I am watching this week. And now I get to hear from you. This is my favorite part of the show. What are you guys watching? Let me answer some questions from you. Somebody says Amazon 3,500 easy soon. Yeah, I agree. I agree 100%. First question is Kelsey. Hey, what's up, Kelsey? Touch on CrowdStrike again. Do you feel that we should wait for a pullback, or is this current price a good entry? So that's a really great question here. CrowdStrike is a fan favorite. It's my favorite. I love CrowdStrike. It has had a pullback along with Fastly. I know I had a lot of people asking about Fastly as well. So if we look at CrowdStrike, if I can get it to pull up here, maybe. All right. For the sake of time, I'm going to pull up on here. So CrowdStrike, I'm going to pull it up on Thinkorswim, is had a relatively decent pullback. I think that potentially it does have the potential to come back to around $93 a share. So should you wait for a pullback? I think that, should you wait for a pullback? I think that it's definitely reasonable to wait for something like that. But if by some chance this gets back up at $98, $99 a share, this should get back up over 100 in my opinion. Looking at this, I think that, there's just nothing but crazy demand. And this goes back to the remote work stuff. I think that remote work is here to stay, whether we take care of the Rona or not. And so the demand for somebody like CrowdStrike in the cybersecurity space is only going to increase from here. As we know, the stock market is a forward-thinking vessel, and this has already moved exponentially because of it being a forward-thinking vessel. But I think that it's not done yet, in my opinion. I think with CrowdStrike eventually gets back up to those highs. I called CrowdStrike getting to 150 by the end of the year. I still stand by that, and I think it does it. Waiting for a pullback makes a lot of sense. I think that there's definitely some opportunities if this comes back to around $93, $94 a share, sitting here at 97. But I love CrowdStrike, buying on the dips, 100% in my opinion. Thanks for the question, Kelsey. I appreciate you. You guys are... If you guys are getting value out of this, I certainly would appreciate it. Let me just come back here so you can see my big, giant, beautiful face. Hopefully it's not too white. Did it go back to being white? No, it didn't. We're good. We're good. So I just wanted to check in, see how many people we got here. Real quick, I'll get that question. What do you think about Wayfair? I'll get to Wayfair in a second. Just wanted to get a count here. We got 463. Hell yeah. We got 120 likes. Let's get those likes up to 200. Can we do it? You guys are amazing. 464. Hell yeah. You guys are awesome. All right. So Wayfair. Giving you my opinion on Wayfair. Let's go back over here and look at this here. So obviously Wayfair has been an absolute juggernaut, especially in the e-commerce space. I love Wayfair, but the thing of it is that, there's been some controversy, but none of that's actually been proven. I don't think any of that's warranted until we see some solid evidence. If you guys are curious about it, just Google it. I'm not going to sit here and explain it to you guys, but I like Wayfair moving forward. People have been spending money like crazy on their homes because they can't do anything else. They're absolutely bored. They have tons of pent up demand. I like Wayfair. I think that 206 seems to be a relatively decent area for us to pick up some shares. If you're wanting to wait a little bit longer to think if it comes back down a little bit lower, I like it around 196. That being said, I'm very bullish on Wayfair. I think that this continues because of all the other things that we've explained earlier. Remote work, people staying at home, people not really going anywhere. I think Wayfair is definitely a good one to continue to hold on to or end up buying on some dips here. Like I said, 206 or 194 seems to be reasonable areas for a pullback, which, by the way, if you guys are, I forgot to mention, if you guys aren't part of the Chaos Crew here real quick, let me, a WeTrade HQ admin, throw me that question again, but I'm going to explain this here real quick. If you guys aren't a part of the Chaos Crew, then oh, shoot. Sorry. If you guys aren't part of the Chaos Crew, if you guys got value out of today's video, I actually provide a watch list every single day. Instead of just one night a week, which obviously you guys get to interact and connect with me, which is awesome. But instead of one night a week, you get one from me every single day of the week. And you can go check it out at the Chaos Crew by clicking join next to subscribe. Or there's also a link in the description as well. If you guys want to be a part of that, would love to have you over there. It's $4.99 a month. Super cheap, but it also helps support the channel, so I certainly would appreciate it, guys. Go check it out over at the Chaos Crew. We have almost 500 people in there, which is awesome. So lots of people getting value out of the Chaos Crew. Would love to have you over there as well. So there we go. Thank you so much. Appreciate you, WeTrade HQ admin. If the market does crash, just need to buy the dip and wait right now, or does it come back up? So, here's the thing. If you're looking to be an investor in the stock market, it's a really great question. Thanks for that, Sony. So as far as if you're investing in whatever stocks that you're investing in the markets, buying on the dips makes all the sense in the world, right? But make sure that you're doing it in areas that it makes sense. In my mentorship, where I go live with people every single day, we talked about this on Friday, and we bought the dips on areas that actually made sense. Not just buying it because you're red, looking for those areas of support and looking for those areas to hold support. And so, if you're still unaware of how supports and resistances work or looking at price action, I would encourage you to just go, there's plenty of resources on YouTube. If you want to come over to the mentorship, would love to have you guys over there as well. But looking for areas to buy that actually make sense from an investing standpoint. From a swing trading or short-term trading standpoint, same thing. It's just that you're going to have to react a little bit faster, right? Where nobody's going to be able to time the market accurately. Well, nobody's going to be able to time the market to the exact penny, right? That's what I meant to say. So you're not going to be able to predict the exact bottom of the stock market. You're not going to predict the exact top. Nobody is. And in any stock that you end up trading. So the method to the madness is just looking for those crucial areas where it could potentially pull back to, waiting for it to either settle out or start to see buying return off of those supports and or resistance areas. And that is really kind of what you want to pay attention to when looking to add to your positions or maybe make entries, all that good stuff. But as far as the stock market's concerned, we've already gone over those potential scenarios where it could come down or it might end up going back up. And so you just have to make sure that you're reacting accordingly. So good question. Thanks for that one, Sony. I appreciate you. So many good questions here. You guys are amazing. Next question here from Esteban Castillo. Any opinions on Fastly? So Fastly is I still feel very strongly about Fastly too. Let me go ahead and share my screen with you again, and we'll pull up Fastly's chart. It's had a really decent pullback, and I say decent because I think it's good. I think it's good that it's pulled back here. It's actually held very strong up above 73.34. This just shows signs of health, in my opinion. Nothing goes straight up. RSI has finally cooled down some, which certainly helps out a lot. I think that this is a really healthy pullback. If this comes back down and can hold 74, high 73 area, I think it makes a lot of sense to either enter into this stock if you haven't entered into it already, or looking for potential places to add around this area if we start to see buying return on Fastly. That being said, overall, I'm very bullish on Fastly. We have earnings coming out on Fastly next week, so expect to see that on Stockwatch Sunday next week. And I think that they absolutely crush earnings. They're expected to grow by 50% this quarter. Let's see if they can do it. I think they do. But yes, I love Fastly a ton. Still feel very confident in that stock. Antonio, real quick, I see you asking about the join button. If you can't see the join button, there is a link in the description of this video right now. It'll be the channel perks, so go check that out if you guys want to check that out. If you can't see the join button, I don't know why it does that sometimes, but it's a YouTube issue I got to get on them about. Hey, Brad, what about Apple from Cocoliso? Apple. So Apple is kind of like in the same vein of a Facebook or an Amazon. It's just buy it, in my opinion. I love the fact that it came down here. So we talked about this in Friday in my morning live stream. This was a perfect dip buy that we saw here. Really good support area around 356. If you didn't get into that 356 area, then maybe look for a potential pullback back here around 368. It busted up through that resistance on Friday and looking to break through another one at 372. I think that this probably ends up going higher. Apple isn't going anywhere, in my opinion. If it does pull back, definitely would be another really nice grab at 356. Would be great if it pulled back. But these are the companies that you really want to look at, folks, when you're looking to either do really good swing trades, or if you want to continue to build your portfolio for long-term growth. Look at good companies. And I know there's a lot of you out there that may be new to this game, or maybe you started trading because of the Rona. You're stuck at home, and a lot of you, and I know that it's been a lot of you because a lot of you commented on my on some of my videos when I was kind of throwing some shade at a lot of these super speculative penny stocks. When you think they were thought they were going to the moon and they didn't. The thing of it is that you have to look at these good quality companies, good balance sheets. They're still killing it, even though we're going through some crazy times right now. And Apple is one of those stocks that just continuously crushes it. So when you look at dips to buy, look at companies like Apple, Amazon, and just because they're high priced, don't let that scare you away either. Amazon, it came down 10%. 10% is 10% in my book. I'm always looking for percentage gains. I don't even really pay attention to the price anymore. You're looking at percentage gains, and that's really what matters at the end of the day. Don't look at these $3 stocks expecting them to make you rich overnight, because that's not going to happen. If it does, you might as well just play the lotto at that point, because your odds are pretty much the same. That is gambling, in my opinion. When you're looking for good ones to invest in, look for good quality companies that are going to, and if they pull back and they really pull back as an over-exaggeration, or maybe there's no good reason, like we saw with Microsoft where they had absolutely incredible earnings and it's pulled back and even dipped below $200 a share, I think that's an absolute good area to buy, in my opinion, because of just how good that company is and what they are doing for the world. I mean, honestly, you look, and so in my opinion, I think that people asking about Apple earnings. Let me see here. Hold on one sec. I'm actually going to pull Apple's earnings. I'm going to come over here. I'll bring you guys back over here. What was Apple's estimated earnings? Let me see here. I think they probably end up beating those earnings. I don't know what they are, but all the FANG stocks, in my opinion, are probably going to beat. Let's look at Apple's earnings. Estimated earnings per share are going to be average estimated earnings per share are going to be at 202. Yeah, I think they beat those handily. Looking at the chart here, they beat earnings by a mile last time around. 208 is what they were expected. 255 is what they came in at. I think they absolutely blow those away. The thing is with Apple right now, their revenue is going to be all app services, and they've absolutely been killing it as far as that's concerned. So I think that they're going to do fine. Stephan, not everything is beat. Yeah, no kidding. That's why I only talk about stocks that I think are going to beat earnings. Why would I talk about ones that aren't going to beat? Mike, think Alibaba will raise if Amazon crushes earnings? That's a really good question. I don't know. By the way, Rob C., welcome to the crew, man. Happy to have you. See, Rob C. just joined the Chaos crew. Thanks for joining, buddy. But as far as Amazon beating earnings and having it impact Alibaba, I don't think it really will. You have two different areas of the market. Looking at this, I'm just pulling the chart up on Alibaba, and they're absolutely crushing it as well. There's some current concerns here, especially as it relates to U.S.-China relations, and so that's the only real concern I have as far as that's concerned. Baba, I think, are still a good one to trade. I like Amazon better than Alibaba. Just kind of my opinion as far as that's concerned. Michael Wade, welcome to the crew, bro. Nice to have you. Thanks for joining. Appreciate the support. All right. Where are we at? We're almost out of time. We got one or two more, right? Where are we at, admin? All right. Thoughts on SPCE reveal on Tuesday of Cabin. That one I'm not sure of. SPCE, this is obviously speculative at best. I traded SPCE recently based off of technicals. This moved up above the SMA here and really started to kill it on the daily chart. I actually regrettably sold it too early. Ended up buying it around $14, sold around $20, and it just kept ripping, absolutely crushing it. It did pull back here. I think that Tuesday, I don't know. We'll see. I think it's going to be interesting to see if it even impacts it at all. And if we're going to relate this to a speculative stock, I'm not going to compare this to Nikola because I think that, Richard Branson and everybody over at Virgin Galactic knows what they're doing way more than Nikola does, and Trevor Milton's an idiot, in my opinion. But that being said, if you look at this from a speculative standpoint, they had, Nikola had revealed their truck, their pickup truck, and it was pretty non-reactionary. Nobody cared. This might be the same kind of reaction with SPCE. I don't think it really gets impacted by Tuesday's reveal much at all. But I think what's really kind of been impacting SPC has been all the upgrades from analysts, and it does get influenced by them a lot. That being said, I think it's a little bit overbought. Probably ends up coming back down at least a little bit, maybe potentially back around $22, or maybe even to that nice little support around $20 per share. All right. Hey, thanks, guys. I appreciate the love. Any OTC stocks you're watching? Not recently. So there's been a couple of them, and I'll just rattle them off here real quick. Peso had to delay their merger. I think that they're still a really good, strong company. Might be a good one to keep an eye on. KAVL and KNOS are also really good ones to watch as well. Do some due diligence on those, but those are ones that I've kind of been keeping my eye on. Peso is one that I'm actually actively in, but KAVL, KNOS, those are definitely good ones that you might want to take a look at. KNOS has been an absolute rocket. We actually called that out in our mentorship at 0.008 cents per share. Let me just so for those of you who don't know, I got my start here on this channel and in my trading career with penny stocks, with over-the-counter penny stocks, and then it started to evolve a little bit. But we still trade penny stocks every now and then, and this was an absolute monster. KNOS, we got in. A lot of our, I did not, just full disclosure, but a lot of our folks within the mentorship got in at 0.018 cents per share. So less than 2 cents of a cent. And it's gone up to 24 cents. This has been an absolute monster, but it still looks hella bullish. If anybody was curious about KNOS, this is one. They have filters that actually help protect against COVID. So that's what the allure is here for KNOS. But absolute monster. Congrats to the Chaos crew in the mentorships. Shout out to I Like BB Stock. He's the man. But this is an amazing move from February when we first started talking about it. Pump and dump. I don't see how this is a pump and dump when it's been running since February, bro. 4 months ago. All right, so last one here. Do DraftKings, do you think it will increase with sports opening? Here's the thing with DraftKings. DKNG, if I had to put my money somewhere in the sports betting place, I would probably put it with Penn National over DKNG. So DraftKings is definitely a good one to look at, but this has been another SPAC play. So special acquisition company. So if you guys don't know what SPACs are, it's exactly what Nikola did or exactly what SHLL did. DKNG actually did the same thing. Now, I'm not saying that DKNG is going to have the similar reactions as those companies did after they went straight up and then have come straight down. But it's still very risky. They don't have a whole lot to go off of from a balance sheet perspective. Demand is absolutely insane. So that's what I think is going to keep DraftKings going. But are they going to run because sports are getting back into things? Maybe, but I think that's going to take some time for us to actually realize that. It's not going to be instant, right? People want to see revenue come in as a result of sports getting back, coming back. And so, it'll be interesting to see how this plays out. I think it's going to be a little bit more of a delayed reaction than, oh, baseball just started, so that means DraftKings will go up. Or NBA just started, so that means DraftKings will go up. Not necessarily. We got to see what kind of people are spending money into these companies. But I think that Penn National, good old Davey Day Trader, I think this one has a lot more promise to it. They have a good balance sheet. They already have existing revenue. And getting into the sports betting place, if I had to put my money somewhere, it would be Penn National over DraftKings. All right. That's going to do it, folks. Again, if you want to be a part of the Chaos Crew, hit that join button. If you like this video, you want to help me out and just supporting the channel, and that way it doesn't cost you any money, hit that like button. I certainly would appreciate it, folks. Thanks so much for tuning in. As always, I will see you all before the bell. All 500 of you. B. Smith is out. Have a good one.